now. All right, we are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your money show host for this session. Good morning. Welcome to the show. Hope you're enjoying show so far. Excuse me. I do have Sean in the Zoom room with me. We're ready to begin his presentation on time in just a couple of minutes now at 10:40 a.m. Eastern Time. Thank you all so much for your patience. If you're looking for something to do while you wait for the session to begin, feel free to scroll on down to the virtual booth below the video player. You can check out some of the Quest's handouts. I do believe they have a video in there for you to watch as well if you're interested. Hello again. Just for anyone only just joining us now, wanted to pop in once more to let you know that the next session will begin on time in a couple of minutes now at 10:40 a.m. Eastern Time. Thank you. Hello, good morning, everyone, and welcome to the session. I hope you're all enjoying the show so far. Joining us here is Sean Munyo, managing partner of Bequest Asset Management. Now, Sean leads the firm's investment strategies, risk management, and compliance, adhering to the Investment Advisors and Commodity Exchange Acts. Now, with that all said, Sean, I'm going to go ahead and hand the mic over to you. Of course, I'll be right here if you need me, but the floor is all yours.
Great, Charlotte. Thank you so much, and thank you to all of our virtual money show guests. It's always a pleasure to be on this platform, and we participate in a lot of the in-person events, and we're excited about an in-person event coming up here shortly in our own hometown here of Sarasota. But anyways, as Charlotte mentioned, I am Sean Money, one of the managing partners here at BQuest. I manage our investment strategy, a strategy that we've been implementing now, me and my business partner, Martin Sines, over the last 15 years, investing in real assets And it's on days like today, weeks like today, where I'm reminded why many of our investors, now over 400, have come to us, have invested in us, invested alongside our investment strategy. That's really what I want to talk to you about today. And the title of today's session is Stress-Free Investing in Volatile Times. And so it's a perfect title for what's actually going on in the equity markets today. I would just turned on the news and kind of saw where the market was again today. And it's been a rough ride. It's very a volatile time in the equities market. But what I'm here to tell you is there are some other options for you. And we're going to talk about that today. But before I get into it, I really want to kind of set the stage for what we believe the problem is and what we do here at Bequest to solve that problem. So we'll talk a little bit about the old 60/40 model that you've probably been told to manage your portfolio with years and years ago. We're going to try and tell you how we believe that model is broken. We're going to tell you how there is a structural shift towards private markets that's going on in the industry right now, and then how Bequest kind of solves the problem. We have some options for you. We'll talk a little bit about our track record and, of course, our investment strategy, and then what we are bringing to the marketplace. And so it's going to be a quick one here. And we do have some more information available to you, but let me get right into it. I don't know that I need to press on this much, but the point we've been making to our investors is if you've been building your portfolio on this 60/40, 60% equity, 40% bonds, if that's where your portfolio sits today, we believe the system is broken. We believe it's time for a new strategy. And so this proves that over the last 10 years, if you've implemented a 60/40 portfolio strategy, you've likely earned about a 4.4% of return over time. And in fact, if you think, well, that's just right now, well, what we've found is moving forward, it's not getting any better. It's only projected to be about a 5.4% return if, in fact, you implement this portfolio strategy. Why? Well, the whole reason you buy 60% equities, 40% bonds is that you can create this diversification inside your portfolio. In fact, when equities go up, bonds go down, and when equities go down, bonds go up. But what we found, and here the data is very clear, that they are moving in tandem. These are not diversified. The beta is connected. When the bonds go up, equities go up. When bonds go down, equities go down. And so, that's not always been the case, but recently it has been. Another interesting point, and I don't know that I have to make this point all that hard, is that, what's interesting is that in the S&P 500 today, the Mag 7, those 7 important stocks now make up an astonishing 34% of the entire S&P 500. So 7 stocks, 7 equities now make up about 34%. And what I find is interesting is what you're seeing amongst these companies, they're starting to invest in each other, right? They're making bets on other companies that kind of look like them, assuming that, hey, all tides rise all boats. A rising tide will ride all boats, lift all boats, excuse me. And so what's interesting is that if you don't have these 7 inside your portfolio today, you've likely not even been keeping up with the S&P 500. Another very important topic that we discuss with our investors is how income is eroding. And in fact, if you've implemented a 60/40 strategy and you look at the real income that you've generated, in fact, when you put inflation in there, this investment strategy is 60/40 and actually has lost you money. Our research indicates that if you've implemented this over the last few years, you've lost about 0.5% in the market. And so we believe the strategy is broken. The 60/40 model is broken. And the alternative space is the answer. It's not 60/40 anymore. You need to take 20% of your portfolio and make sure it's in alternatives. What we want to make another point here is how even high income earners are actually feeling stress in the market. And I don't have a whole lot of time to dig into this, but what we've found is that 1 out of 3 high earners, six-figure earners, are actually feeling stress in their lives. Why? Because they're worried about generating cash flow, right? Their income is used to be enough, but now with inflation, it's not enough. And so folks are looking for other ways to generate cash flow. Why? Because we know things are getting more expensive. So 1 in 3 investors are seeing stress in generating cash flow in their lives. I talked a little bit about the 60/40 strategy is broken. What is the answer? I said, well, there's alternatives, I believe, is the answer. And there's a lot of people out there that believe what we believe. And so why? Why are investors looking to the private markets for the answers? Well, what's interesting is that, the public market is so massive. Well, the private market is growing just as fast. And in fact, about 17 trillion kind of creates this bucket of what we call private markets. And then it encompasses real assets, which is where we're in, private equity, venture capital, private credit. We're also in the private credit bucket, and real estate. And so opportunities are expanding here in the private markets. There's been a lot of discussion about access to these private markets. And, up until just recently, it was very difficult for you to access private markets. And in fact, it was only available to the uber wealthy, the folks who had, very, very large portfolios. Only they could access the private markets. But here at BQuest, we're opening up these types of investments to ordinary investors. We talked about the rise of private markets. What's interesting is there's a rise of private capital. And so we would consider ourselves more in the private capital bucket for alternatives. And so why are focus shifting to the private credit market? You've seen a lot of that on TV recently. But why? It's because there's only about 3,000 publicly traded companies out there. Yet there's about 18,000 companies in the private market who all need capital to grow, who all need a strategy. And so a lot of capital is placed in these private markets, private credit, in order to capitalize on the opportunities, significant amount of opportunities in the private company market. In fact, this has been growing over the last 15 years significantly. I want to talk to you a little bit about what we do here at BQuest. And in fact, I mentioned early on that we have been deploying our investment strategy now for well over 15 years. A strategy that my business partner created, that he taught me just about eight years ago. But what we do here at BQuest is we implement that strategy. We implement that investment strategy. Our mission here at BQuest is helping investors achieve financial freedom through consistent, high-yielding income strategies backed by real assets. And so we've been doing that now as a fund for almost 6 years. And so our focus is generating consistent, predictable return from these assets. And well over 400 investors have called BQuest their home because during times like right now, where the market is very volatile, nobody calls BQuest and says, hey, the market is down. What's going on with my investment? And we would tell them, listen, the distribution's going out. We're still generating cash flow off the assets that we buy. And so I'll talk to you a little bit about the investment strategy and what we do here. But before I get into that, who are we? We are a registered investment advisor. In fact, we got that status here in 2025. A lot of our investors says, why did you do that? Well, because we are actually focused on making sure that we're doing in what the best interest of our investors. As a registered investment advisor, even though we don't advise you as to where to put your money, we actually offer a product up to our investors. We're not telling you where to put your capital in different equities, and we're not building your portfolio. We're offering up a product to you. And so we felt that it was right to be registered as an advisor because we're advising you to invest in our product. That also makes us a fiduciary. And we hold that responsibility on at a very high level. And so that was a big reason, a big change for the company here in 2025. We've also been raising a lot of capital here, about $15 million, almost 16 million this year in our investment strategy. So investors are coming to us looking for consistent, predictable returns. Now almost 400 investors have called Bequest a home for a portion of their portfolio. We talked a little bit about that we've been around now investing as a fund for almost 6 years. For 68 consecutive months, we've been delivering consistent, predictable returns to our investors from these real assets. We have 3 funds that we operate here at Bequest. The income fund, the Bequest Income Fund, is our oldest fund. It's been around from the beginning. It holds performing mortgages in that fund. We call them re-performing mortgages, and I'll tell you a little bit about that in a moment. So all performing mortgages are in that fund. The legacy fund on the far right, it's been around for now almost 3 years. That is a multi-strat fund. We have our cornerstone performing mortgages in that fund. We also have commercial real estate in that fund and our modern energy investments. We went to the SEC in 2024 and we said, listen, we want to take our investment strategy to the world, to the masses. And so in 2024, we sat in front of the SEC and took our investment strategy, and they approved it for what's called a Regulation A fund. And so now it doesn't really matter if you're accredited or not accredited. We actually have a product for you. And so in 2024, we launched the Bequest Bond, which is a fund that invests in performing mortgages for accredited and non-accredited investors. And so those are the products that we have on the marketplace today. Just a quick overview, anywhere from 8 to 12% return can be generated when you invest in these funds. And you say, well, what does that mean? Well, when you deploy capital in the fund, your return determines how long you place the capital in the fund and how much capital you place in the fund. It's not a variable return. We're not under promising, but when you come into the fund, you will get a percentage yield that you have come into the fund with, and we will deliver upon that yield. And in fact, everybody said, well, have you ever missed a return? Well, we have not missed a return. Any investor who's come into a particular class, from the very beginning, we've always delivered what we said we would deliver. These are the current product offerings here in our multi-strat fund, the legacy fund. It's anywhere from an 8 to 12% return. In the income fund, which is just performing mortgages, it's anywhere from an 8 to a 10% return. And if you come into our bond, which is the non-accredited product, it's anywhere from 5 to 7% return. So let me talk to you a little bit about our investment strategy, and I don't have a whole lot of time to get into it, but I mentioned to you that it was performing mortgages were the cornerstone of the company. And in fact, this investment strategy was created by my business partner, Martin Sines. He wrote a book about this strategy in 2017. I was one of the first people to read the book. It inspired me so much that I flew across the country to Washington, D.C. to hang out with him. It was that point that we developed a relationship, and I said, will you teach me this strategy? And over the next 6 months, he poured into me, taught me the investment strategy, and what do you know, but many years later, we went into business together, taking this strategy to investors, which is a big passion of his, and that's really why he wrote the book. And so what is it? We buy re-performing mortgages off the secondary market. You say, well, what's a re-performing mortgage? Well, there's many investors, many homeowners that will go through a hard time at one point in their life. Likely that's been you at some point. And so a homeowner goes incurs some stress in their life, it's usually three things. It's a divorce, it's a loss of job, or it's health related situation. And that borrower goes through a period of time where they stop paying their mortgage. But what we know over the years of investing in this strategy is that those are all most of the time temporary situation. A borrower, homeowner, gets another job. They get remarried, they get healthy again. And so they get back on their feet. They start paying their mortgage again. But because there was a period in time where they stopped paying the mortgage, that mortgage has a mark on it. These are still good mortgages. These are still performing mortgages. These are still mortgages on houses, middle class houses, and people are still paying the mortgage. But because it has a mark on it, the banks will sell it to us at a discount. We buy those loans, we hold those loans to maturity, and we generate yield for our investors. This is one of the main ways we generate return here at Bequest. We also have some commercial real estate that we invest in, and we believe in. These are value add opportunities. What you're looking at is a 61,000 square foot medical office building that we have in Houston, Texas, right? We like opportunities where you're in Houston, medical office, number one medical market in the world. We have an investment there. We were able to buy this property a few years ago. It was about 50-60% occupied. And through hard work, through management change, through a focus change on the pricing, we were able to get this building occupied and generate cash flow for our investors. This is the focus here at Bequest. We're looking for value add properties, generating cash flow for our investors. The third strategy we have, we call modern energy. I don't have a whole lot of time to tell you about my background, but before I met Martin Symes, my business partner, I used to build data centers for Facebook, Google, Microsoft. We were there building data centers. And back when I would build data centers, never did we ever worry about the cost of energy. Now the price of energy is critical. And so with my background, we were able to find an energy park down in South Texas where we acquired the rights to the property next to a very large power plant where we locked up the power there with a purchase power agreement. We sell that power to tenants that come on our property. And we sell that power to both blockchain and AI workloads. The tenants that come on those properties buy power directly from us. We generate power directly from the grid, about 4.5 cents, and we sell that power for about 8 cents. And that's our modern energy strategy. Everything that I talked about, all three strategies, everything that we do generates cash flow. The most important thing we do is distribute cash flow on a monthly basis to our investors. These real hard assets that we own and manage ourselves is what generates that cash flow for our investors. If you take a look at the performance of Bequest over time, we believe we've beat the S&P 500. Again, consistent, predictable returns is what we deliver here at Bequest, and that's why so many investors have come and joined the family. And I want to take you to one of our investors that we met years ago here on The Money Show, and I want to have you listen to his testimonial.
My name's Mac. I've been with Bequest now for 46 months, just shy of 4 years, and I'm in 4 separate funds currently. I started out in the Reperforming Mortgages Income Fund. I then got involved in the Equity Fund with Fallbrook, and then I invested in the CMJV2 Fund with the Bitcoin mining, and I recently also expanded into the Legacy Fund. I met Martin at the Money Show, and he was giving presentations, and I'm a very conservative person. I think I watched presentations 3 or 4 different Money Shows, and then I finally touched base and I got to know Martin very well. It's been flawless. It's been 46 straight months in the income fund, and the money hits my bank account same day just about every single month. I get statements on a regular basis and it keeps me informed. The passive income comes in very timely and you can really count on it. I wanted something to complement my investment into the stock market, and with the stock market going up and down so much, I decided, well, I wanted to look into the passive income route and everything, and be honest with you, I've been very impressed. So my level of confidence had to be very high for me to have invested in 4 separate funds at BQuest. I sleep a lot better knowing that my money's at BQuest. And, you know, Sean and Martin, as well as Jim Hershak, they're always available to talk to you if you have questions. It's a family environment. I've been investing for decades and decades now, and I've never had an experience like this where if I had a question, I would send somebody an email and the 2 co-owners of the company would get back to me within 24 hours. And I mean, it was just phenomenal. And my level of confidence in investing and feeling comfortable that not only will my money be there, but the passive income will consistently and periodically be there as well. One thing about BQuest is they always emphasize the simple fact of compounding. And if you don't realize, you know, the stock market on average will return about 9.5% per year. And then you've got to worry about all the ups and downs. And if you get into the BQuest passive income, you're making about the same, if not more, than it is on average. And, you know, some of the higher funds in BQuest are actually earning more than what the stock market's earning on average. So it's a great addition to my investing in the stock market. I think it's family. They do treat you very well. They are concerned about you in the sense that they offer free training to their investors all the time. I think I've attended every single one of y'all's training classes over the last 4 years, and I've learned a lot. You know, it was a side passive income. I wasn't familiar with it before investing in BQuest, and it's really added to my portfolio. And I think that everybody really should have BQuest in their portfolio, or at least consider it.
Well, thank you, Mac. It's always good to hear from our investors. You know, we can stand up here and kind of talk about our track record, but these are real people. We've impacted their lives by generating returns for them consistently year after year, month after month. And Mac talks a lot about education. And so we are big on education. In fact, that's how I found my business partner. He wrote a book. He wanted to share his knowledge with the world, this investment strategy. We've continued that spirit throughout the company. And so these are some of our resources that we've built here in-house with our phenomenal team at BQuest that we want to give to you. This is our gift to you. You don't have to invest with us. This is not a trap. We want to give these gifts to you. There's some phenomenal tools here. I look at the income statement there, the living financial statement. This is a tool that my business partner is so passionate about generating passive income, and Mac said it, that we created tools for you to track how much passive income you can generate, how much passive income you're generating through other investments that you might have. Because as I mentioned in the beginning, there's a lot of stress and anxiety around even high income earners as to, will I have enough income to retire? Will I have enough income to continue the lifestyle that I want? That's what we solve for here at BQuest. The assets that we manage with our team generate cash flow. We distribute those cash flows to our investors, right? You may say, well, I'm looking for alpha. Well, we generate cash flow here at BQuest. And so we have a great tool there that'll help you kind of manage the cash flow that your investments are generating for you and manage your expenses and make sure that everything balances at the end of the month or at the end of the year. We also have the book that changed my life, Note Investing Made Easier. We're happy to give that book to you. Again, after I read that book, I flew across the country and met the author of that book, Martin Science. Martin also has another book that we want to give you, Cash Flow Dojo. We have the Legacy Planner. We have tool after tool after tool, the BQuest compound interest calculator that we would love to give you. And so all you have to do, it's yours for free. Just scan this link here and book an appointment with our phenomenal team here. You got Sean, Lennon, Rebecca. They will happily meet with you and sit down with you, take you through. I didn't have a whole lot of time to dig into the entire strategy, all the products that we have, but we have a slew of products that can help you achieve whatever you're trying to achieve. And so we ask you to sit down with Sean and Lennon and Rebecca so that they can kind of understand what your objective is. What are you trying to achieve? And we have a lot of tools to do that. Once you book your meeting with our team, we will happily send you all of those gifts. We'll physically mail these books out to you. We will spend time, give you access to these tools. And so what I'm asking you to do right now in this moment, click on the scan the QR code, set up your meeting, do what 400 other investors have done over the last almost 6 years. Invest here with beQuest. So I just want to thank you all for this time that we have. Thank you to the Money Show for allowing us to come on the platform today and talk to you about beQuest. Here's our phone number. We're here in Sarasota, Florida. In fact, if you're coming to the Sarasota show, we will see you there. We will happily meet with you. But here's our contact information, our website. And with that, Charlotte, I will hand it back to you.
Well, thank you, Sean. And yes, we are very much looking forward to seeing you in Sarasota. To those of you watching live, I did go ahead and put that email address into the chat for you. And Sean, I'll let you know here. I have just a G-Nan in the chat saying thank you very much for for sharing this information today. Beautiful. Well, for those of you watching live, thank you for joining us. Stay tuned as we have a lot more in store for you today in this Money Show Virtual Expo. If you have further questions or you missed that QR code to scan earlier, you can reach out to Sean and the team via the email address on the screen, or you can scroll down to the virtual booth and you can also submit inquiries that way. All right. With that all said, I hope everyone has a wonderful rest of your day. Take care.